Consumer goods and distributors and wholesalers, and as a matter of fact, across the country are seeing a pile-up of inventory at the entry level of distribution chains. The cash crunch in the system has led to a slowdown in buying, resulting in inventory levels rising to 15 days from an earlier 7 to 10 days, according to Bloomberg Quint channel checks. Let's discuss the impact of the same with Lalit Malik, the CFO of Dabur. Lalit, good afternoon, and thank you so much for taking the time out. Let's start by talking about your inventory levels, not possibly just for Dabur, but perhaps for the industry as a whole when it comes to the FMCG sector. What is your observation now at this point in time? And well, if you could give us more details about how you're reading the situation on ground.
Sure. I think what we have seen in the recent couple of months is that the demand has started slowing down, primarily on account of the liquidity crunch, low sentiments, and also because of the winter getting extended, especially in the north zone. There has been a slowdown in the demand of some of the products. So as a result of it, there is a slight increase in terms of the inventory. However, it appears that it would be more on a temporary basis, which will get self-corrected over a period of time.
Lalit, one of your peers, specifically Hindustan Unilever, has indicated that there has been a slowdown in the fourth quarter. If that's were any indications, and we've seen some very strong volumes growth for a lot of these FMCG companies across the board, and including yours, where we saw a good 13% volumes growth about 12.5% volumes growth coming in. Do you think that volumes for this particular quarter could be a little more subdued coming in?
Certainly, I think if we look at till the third quarter, we have seen a very normalized demand and we have also seen our market share gain. But in quarter four, we have seen the demand getting slowed down, as I said earlier, and primarily on account of liquidity crunch and also on account of low consumer sentiments, and at the same time on account of shifting of the extension of winter in the northern state. So because of that, the overall demand has slowed down in quarter four.
Lalit, so then let's extend and we'll build on that fact. So you have mentioned a little bit of a liquidity crunch as well as a slight deterioration in demand sentiment. Again, we speak to a lot of companies and there's a suggestion that there's a preference now towards perhaps lower pricing from customers. The jargon term used in this case is also down trading by many analysts on the street. What is your observation here? And if you could care to comment on this particular aspect.
So certainly, I think liquidity crunch has impact on the demand, and therefore there has been a crunch in terms of the credit squeeze that we have seen in the market. As far as our products are concerned, generally we sell it on a cash basis, which is a payment on demand on supply. So we do not have much impact of that, though we have extended our credit on a select seasonal products, but it's not that material. Having said that, that overall, in view of the liquidity crunch, there has been a kind of a slowdown in terms of the offtake of purchases by the distributors and down the line in the chain with the wholesalers and retailers.
Mr. Malik, good afternoon. Neeraj here. Just one follow-up to that. Have you seen any kind of evidence of consumers, while they might still be looking to buy the product, opting for lower price points? Hitherto, the conversation always has been that in India, consumers are opted to move up the value chain. Are we seeing some signs of the reverse happening as well?
See, what we have seen is that it's not the low pricing, it is also the low unit packs. So especially in the rural markets, what we have seen a good offtake of the low unit packs, which are primarily less quantity and the less price, because people are price sensitive in terms of their purchasing power. So therefore, we have seen an expansion, especially in the rural market, on the LUPs, which we call it the low unit packs.
No, okay. So Mr. Malik, my question more was from a perspective of what could this be signaling towards the health of the economy. This low unit pack, I think some of the toothpaste companies, etc., even in your case, I guess, all of that has been a long-standing initiative in order to touch all price points. But for the same customer, even if prices have not, for products where prices may not necessarily have seen a rise, are those opting for lower price points as well?
Yes, I think to some extent that's true, because the price increase or price reduction is primarily also to do a lot with the inflation, and what we have seen in the last I would say year and a half is there has been very low inflation impact which has started coming up. So there is a price point sensitivity among the consumers, certainly, and they are considering there is a constraint on the liquidity with them. We have seen their purchasing purse or the size has shrunk a little, and therefore the focus is more on the lower price and the lower unit packs in order to meet their day-to-day consumption that they are looking at.
Okay, Lalit. So then I'm going to shift the conversation to your inputs then. If you could give me an idea about how things are panning out. So far for FY19, the cues have been very mixed. So while certain inputs have been very benign for the sector, there are certain other inputs which have been very high. There has been a little bit of a crisscross here. And of course, oil prices have continued to remain volatile, but of late we've seen that little bit of an uptick too. So how are you reading this situation in this case and the possible implications for gross margins?
Sure. I think what we have seen are the two aspects. One, we have seen during this financial year, the rupee weakening. It has gone up to 74, but now it has started strengthening. And two, the crude prices were high and then they came down, and then there is a volatility on that. And three, there has been some inflation, as I said, from the deflationary pressure. There has been now on the inflation in some category of our inputs. So keeping that in mind, there has been an impact on our input prices to some extent, which are crude driven, and also some of the imported inputs that has got the impact on account of exchange. However, barring that, there has been also a little bit of stability in terms of our input cost, especially if you look at sugar, etc. So therefore, overall, if I were to see the mixed bag, there has been very low level of inflation in our input price so far, but it is inching up a little as of now.
Okay, and a word on distribution now as things stand, Lalit, in terms of expansion and any investments that you guys have planned towards expansion of your distribution?
Certainly, I think what we are also planning is in the rural market specifically, we are planning to increase our village coverage from 40,000 to 60,000. We are increasing our overall outlet, direct reach outlet from 1.1 to 1.2 million. So therefore, we are looking for the distribution expansion. We are also looking in terms of channel expansion in the form of e-commerce, where we see there is a scope for rapid expansion in the e-commerce, though overall it will be small. And thirdly, we have also started looking for our activation on the region wise, so that we are more close to the differentiation from state to state. So I think all these things have actually helped us to strengthen our distribution network and increase our penetration specifically in the rural market and expanding our geographical reach.
Mr. Malik, one final question from mine at least. Would you believe that volumes have a chance of not expanding as earlier envisaged or coming off quite dramatically over the next couple of quarters?
You're referring to volume, right?
Yes, please.
Yeah, so I think if we look at it currently, considering there is a subdued demand scenario, we do expect it to continue at least for next one quarter post-election, and we do see some level of stabilization coming from Q2 onwards. So keeping that in mind, we do expect our volume to be somewhere in the mid to high single digit going forward in FY20.
If Dabur's volumes are mid to high single digits, which means they are off from what they used to be, I'm guessing the industry at large would also face this issue.
Well, I think we must keep in mind that if we look at the last year, it was also on a differentiated base of financial year 17-18 because there were impact of GST and therefore there were certain differentiation on the base. Having said that, the current year base is also comparatively high. So for the next year on the higher base, the kind of growth that we are talking about would be more kind of a stabilized growth as we see going forward.
Mr. Malik, just one final question. I know we've made too many final questions, but since the thought came on the back of this answer that you gave, are the in-house brands of the larger formal organized retail chains providing competition at lower price points, which means that the product category may not be suffering, but just that the established brands like yours and some of the others might not see as much offtake because the in-house brands of those larger chains are also now participating in the same shelf space? Is that something that's happening in staples?
Well, I think there has been at a very limited way private label coming in, especially in the modern trade, but that has not got any material implication on our offtake of products because from the customer's point of view, I think they go more in terms of the brand quality and the price point. So therefore, there is at a lower level some impact, but in our category, it is not very significant.